Time now for the Velshi and Ruhle Tax Cut Tracker. Why? Because the wealthiest taxpayers in America could soon get another tax break. What? The Treasury is considering a change to capital gains tax. That would result in a $100 billion tax cut for them, according to the New York Times and the Wall Street Journal. Before we can discuss the pros and cons, let's explain how this would work. Capital gains are profit from the sale of property or an other type of investment like stocks. You know, what rich people have. Currently, we tax capital gains based on the difference between the purchase price and the sale price of an asset. The sale price is called cost, and current rules allow for investors to recoup that sales price, the cost. The cost is taxed at a rate of 23.8%. If you invested a cost of $1 million in 1990 and sold that asset for $3 million this year, you would only owe the tax on the difference. That's $2 million. Your tax bill would be $476,000. Well, the Treasury Department could change the definition of cost when calculating the capital gains, allowing for investors to account for inflation when determining their tax liability. The same investment of $1 million in 1990 would now have a cost of about $2 million in today's inflation-adjusted dollars. That means the investor would only owe half as much, $255,000 in taxes. Compare that to the $476,000 without adjusting for inflation, a difference of $220,000, and that's tax dollars the Treasury Department loses out on. This kind of change could result in an estimated $100 billion in tax savings for wealthy investors. It would also dig into the Treasury even deeper, the hole that they are already in from the last round of tax cuts, which again mostly benefit the wealthiest Americans. And Allie, we have to just slow that down. We're not saying this hurts the American worker, but it doesn't help them.
And it might hurt them, because if you reduce tax revenues, then everybody comes out and says, we got to cut this, we got to cut welfare, and we got to cut social services. So it in fact could help, but it could hurt them. But it's broadening the gap that we're trying to narrow, right, between the rich and the poor.
The president rails against trade deficits, and he basically ignores budget deficits. I mentioned
he doesn't seem to care.
The Treasury Department is in a hole because the tax cuts from 2017 are still not paid for. There's this Republican idea that if you cut taxes, it's going to spur growth. Even if it spurs some growth, not enough. The corporate tax cuts thus far have not trickled down to the American worker. In large part, they've resulted in stock buybacks. Who does that serve? The shareholder. Who does capital gains adjustment serve? The shareholder, not the American.
But our entire tax system is based around preserving money for the wealthy, right? Labor gets taxed more than wealth does. If you have assets and you have capital gains, your tax rate is lower than if you just work for it. So this is just a perpetuation of a problem we've had for a few hundred years in America. It's supposed to be getting better. It's getting worse.
It's not a new idea. Larry Kudlow has liked this idea for years. What's stunning is it's what the president campaigned against, much like when he said he was going to close the carried interest loophole, yet miraculously it stayed in the tax system. And now here we are again, and it's certainly a gift to the donor class.
Hey, MSNBC fans, thanks for checking out our YouTube channel. Subscribe by clicking on that button down there and click on any of the videos here to watch the latest interviews and highlights. You can get more MSNBC for free every day with our newsletters. Just visit msnbc.com/newsletters to sign up now.